Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Friday, August 22nd. In today's episode, I'll tell you what Walmart said in their earnings report about consumers and tariffs. Then, Meta is putting a freeze on AI hiring. Another day, another tech stock beat down. Markets spent all of yesterday in the red, with the S&P 500 dropping 0.2% and the Nasdaq losing 0.7%. It was mostly tech stocks again, driving this sell-off, with every single Mag 7 stock finishing lower yesterday, with the worst performer being Apple, losing nearly 2%. Now the good news here is that the markets recovered from the morning session lows thanks to an afternoon rally. So it could be a sign that we might be in for a potential comeback in the latter half of the week. Now, Jerome Powell's speech today at Jackson Hole will likely play a big role in how the markets end the week, and I've been hyping it up all week, hoping that Jerome Powell drops hints of a rate cut for the September meeting. Right now, the CME Fed Watch tool is pricing in an 82% chance of a 25 basis point cut at the September meeting. That still leaves an 18% chance of no rate cut, which is basically a dice roll. I'm sure those odds will change depending on what Jerome Powell says in his speech. That speech is scheduled for Friday morning at 10 a.m. Eastern, so in 1 hour. We'll go over what he said on Monday's episode. Let's run through some headlines, starting with Walmart. The largest retailer in the world reported earnings this morning, and they reported their first profit miss in 3 years. Their adjusted earnings per share came in at 68 cents, which was 6 cents shy of Wall Street's expectations. The company blames this miss on one-time charges like restructuring costs, so it shouldn't impact their earnings moving forward. Despite the miss on profits, sales for the quarter beat expectations, with the US same-store sales up 4.6%, and e-commerce sales jumped 25%. So that's a big signal that shoppers are still showing up, especially shopping online. Walmart's earnings are always tightly watched because they are the largest retailer in the world, and they're seen as a bellwether for the health of the consumer. They're basically America's economic thermometer. In this earnings report, investors were looking for signs of weakness in consumer spending and the impact of tariffs. About a third of Walmart's sales in the US is sourced internationally from China, Canada, Mexico, Vietnam, and India. Now, Walmart's executives say that they have been adjusting the impact of tariffs on a category-by-category basis, meaning for some items, the company has absorbed the cost increase, but for others, they've passed the price increase to consumers, especially on discretionary stuff. But overall, Walmart says they haven't observed any changes in behavior from shoppers, but they also expect tariff-related costs to continue to drift higher. From my perspective, it seems to be an okay earnings report, especially with the strong growth in sales and e-commerce, but the market has taken a more cautious approach with Walmart stock down about 2%. Let's shift gears and talk about Meta. According to a report from the Wall Street Journal, Meta has hit the pause button on their AI hiring spree, and that's catching some people off guard. The Wall Street Journal reports that after months of scooping up more than 50 AI engineers, with some getting 9-figure pay packages, Meta has frozen hiring inside their AI division. And the freeze even blocks internal transfers unless you get a sign-off from Chief AI Officer Alexander Wang. The hiring freeze comes right after Meta announced another massive AI reorganization. They're splitting their Meta Superintelligence Lab into 4 separate groups focused on research, superintelligence, products, and infrastructure. Meta is also considering downsizing the AI team now. In fact, some AI executives are already headed for the exit, including Meta's VP of Generative AI, who just left to become Figma's Chief Design Officer. I mean, you gotta admit, this is a pretty big pivot. Zuck just spent the entire summer running blank checks to hire away the best AI talent, and now all of a sudden he's hitting the brakes hard and even downsizing? It just reiterates that there might be a vibe shift right now when it comes to AI. Meta seems to be reining in the spending. OpenAI Sam Altman is outright saying that AI is a bubble and that their GPT-5 launch was a misfire. And then I mentioned yesterday about that study from MIT that found that 95% of generative AI investments by companies are yielding no returns. And that's what might be driving the markets lower this week, because AI has been propping up the stock market for the last few years at this point. But if that actually is starting to fizzle out, it could mean trouble ahead for tech stocks. I mean, Nvidia's earnings next week were already going to be a pretty big deal, but now the stakes feel so much higher. That's all the business headlines I have for you. Let's take a look at some stocks making moves. HP shares are climbing this morning after Morgan Stanley upgraded the stock to a buy rating with a $28 price target. Morgan Stanley thinks that HP is well positioned thanks to enterprise consumers throwing money at AI infrastructure. Plus, HP also closed on their $14 billion acquisition of Juniper Networks. Juniper makes all the behind-the-scenes internet stuff like routers, cloud hardware, the boring but essential tech that you need to keep your Wi-Fi working. The acquisition should make HP's revenue less cyclical and make them more vertically integrated, which Wall Street loves. Shares of HP are up more than 3% this morning. On the flip side, shares of Coty are having a rough day after the cosmetics company said they expect declining sales for the current quarter, and they posted a surprise loss in the recent quarter. Coty's US sales declined by 8% in Q2, and that decline was driven by its struggling consumer beauty segment, which includes brands like CoverGirl. But Coty is struggling across the board. Even their prestige business, which includes Kylie Cosmetics and Gucci fragrances, fell 5% in Q2. To make matters worse, Coty plans to raise prices on premium fragrances to offset tariff costs. Turns out no amount of makeup could make this earnings report look pretty, and investors are bailing, with the stock in freefall, down 20% in reaction to this earnings report. That's all for today's show. Keep navigating those waters and see you Monday.